So why wouldn't you do your due diligence there,
I mean,
especially if you're a company with the resources?
most aren't going to know what to look for, though, right?
I
You know,
I
it,
certainly would not.
if you don't have a financial background, you're not comfortable with looking at financial statements. I believe I heard that even within the financials, the loss uh, that triggered this did not actually have to be reported on the actual financials itself. And it was just in a footnote on, maybe page, I don't know the exact page, but let's say page 79 had a small little footnote just letting the world know about this loss, right? This mark to market loss, I believe it was.
I was on the
And
didn't they ask, weren't they going to raise capital, a few billion to
they were
make up for
definitely
that
looking
loss?
to cut because of that. Yeah.
Yeah, okay.
Yeah. So, I mean, there's a few things with it, but revolving around that loss. Because I mean, what it sounds like, and again, we're only a few days out here, so a lot of things could be coming to light that we're not aware of right now at the time of recording this. But it definitely seems like they were not understanding how difficult their client base would have, difficult time that they were going to have of actually raising new capital. So I think based on the increase in interest rates, they were struggling to raise capital. And based on that, they were utilizing the cash within that bank at a higher rate than that bank ever experienced in the past. So the bank assumed that the rate of the cash usage would be in line with what it historically was. And as that started to accelerate, they started to have to cash in their long-term, treasuries, and they were having to take a loss on those, and that's where it all started. But again, I'm sure we're going to be finding out a lot more over the next few days. But that's what it appears to be right now.